Welcome to this special segment on the digital asset outlook for 2026. After a standout year in 2025, marked by stronger institutional engagement, clearer regulatory direction, and meaningful progress in tokenization, the digital asset landscape is clearly moving into its next chapter. To break down what shaped the market over the past year and what's likely to influence the ecosystem as we head into 2026, I'm joined by Eric Rose, Head of Digital Asset Execution at StoneX. Welcome back, Eric.
Great. Thanks for having me again.
Let's start with a recap of 2025. What stood out to you as the key drivers of the digital asset market during this pivotal year?
Sure. Certainly, the two largest ones, which you mentioned in the intro, are regulatory pathways and institutional adoption, and they both actually go quite hand in hand. Obviously, with the turnover in administration in the United States, we've gone from a very anti-crypto administration and framework to a very pro-crypto framework. And although crypto prices currently don't reflect necessarily that, we did see that early on in the year. And I think that a number of highlights, including passing of the Genius Act, but really more of the actions by the administration to ease off on some of the regulatory headwinds have really pushed things forward. I think that especially when we rolled back SAB 121 very early in the year, that really cleared the decks for banks and major institutions to enter the space. And I think that's what we'll see more over time, and we can get into that in the outlook going forward. But as institutional investors really look for clarity from regulation, they want to see mature markets. So they do go hand in hand with each other, and that's what we've seen. We've seen the launch of multiple ETFs in the past several months as the SEC has changed their guidance as well. And so we have both a pro-crypto administration and we have a pro-crypto institutional community.
Okay, well then let's get into it. Let's look forward now to 2026. What do you think will be the most important force driving the digital asset market next year?
So I think it's hard to take away digital asset markets from broader risk and macroeconomic factors. And I do think those are going to drive a lot of price action in the near term, especially as we have certainly battling inflation versus the Fed. We need to see what happens with various economic policies and global policies because they do impact digital asset markets. That said, as we look to see separation from digital assets from other risk assets, we do continue to look for increased regulation in terms of Stability Act moving potentially through and other regulatory not headwinds, but necessarily tailwinds. We have seen several announcements from large banks over the past year about getting into the space. We continue to see those. I think we've seen some headlines from JP Morgan on allowing lending against digital assets. These are all small unlocks that we'll start to see the fruit of that in 2026. As larger institutions come into the space, they give more institutional security to what we're doing. I do expect to see more asset managers. Just yesterday, we saw a headline from Vanguard about allowing their clients to purchase ETFs in their portfolios. Vanguard had been a very stalwart, as I would say, in allowing clients to access markets. So you're going to continue to see more of these dominoes fall where institutions allow clients to get into the space. And that should ultimately drive more price action and more volume into the space.
We also keep hearing about tokenization and stablecoins as the next big catalyst. How important will they be next year, and where do you see the biggest impact?
Sure. I mean, tokenization has been talked about for a very long time in terms of how it unlocks, especially unlocks illiquid assets and allows them to be used as good collateral. I do think that's a little bit further off. That's probably more of a late 26, 27 type initiative. We'll see things becoming tokenized, whether it's money market funds or continued, or whether it's hedge funds or asset managers. But the true unlock of tokenization, I think, is a little further off. Stablecoins, on the other hand, are very topical, and we've seen obviously the passing of the Genius Act, but now we're going to see more stablecoins issued. We'll see more stablecoin usage to the point where you probably won't even realize that you're using stablecoins to transact. And I think that's really the larger goal, is to have a payment system where we can move money instantaneously 24/7. And obviously, as we get to a point where people are comfortable with it, the banks are comfortable with it, the institutions are comfortable with it, you'll see it more and more. You're probably going to see it in headlines pretty much every week next year.
So, given some of the challenges that could come up and how quickly the technology is evolving, how do you think that innovation will shape the next stage of digital asset growth?
Yeah, I think that that's actually probably one of the key factors that we haven't seen, I would say, in the last year or two, given that the current U.S. administration policy has pushed digital asset innovation offshore, and now we're starting to see that come back onshore. But what we do need to see is more technological innovation, and I think that as we bring that over here, or at least encourage it, we'll see these new technologies. Unfortunately, in the blockchain space, there's been relatively little new quote unquote innovation from the space this year. Obviously, stablecoins are important, but they're not particularly new. So the development of new and more important technologies, it's key to it. We just need to see it.
And one last thing before we let you go while I have you here. What themes or risks should investors and institutions be watching for as we head into 2026?
Sure. I think some of the important themes we've already touched on in the past several cycles here, the importance of digital asset treasury companies, or DATs, as they've come into the space, and they've certainly been responsible for a fair amount of price movement. I think that the DAT space has come under pressure recently, and you see some of these companies trading at or below their MNAVs, which certainly is something for investors to watch in terms of supply-demand dynamics. We've certainly seen, companies like MicroStrategy are certainly in the news every day with what are they doing with their balance sheet. They are one of the largest holders, and so the evolving DAT space is something that we certainly need to keep an eye on. Obviously, on the regulatory front, we need to see that. And then we continue to see sovereigns coming in. I believe one of the states just purchased $10 million. I'm sorry, Texas just purchased $10 million of Bitcoin for the state treasury. So you do have these small things coming in. And again, macroeconomic headwinds and tailwinds are really going to drive it as well. Fed policy is going to continue to evolve, and we need to keep an eye on that. So it is a mix of digital specific factors that we're looking at, as well as more global macro.
A lot to keep an eye on. Eric, thank you so much for all your insight. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.